Good evening and welcome to a brand new show of Markets Tomorrow. Another strong day of solid gains for Indian markets. Solid global cues and constructive news flow from Delhi have helped the bulls to regain the mark of 5,900 on the Nifty. In the overall scheme of things, what is the importance of today's close? And is Nifty now on course to cross 6,000 before the year end? We'll discuss that and much more for you in this edition of Markets Tomorrow. But before that, here's a look at some faces who would be joining us on the show today. We've got Dipesh Pandey, co-head investments with India Infoline, now known as IIFL Capital. He will join us all the way from Singapore. Along with him, Nitin Raheja, Chief Investment Officer with AQF Advisors. And to give us a technical understanding of how things are stacked up for Nifty in the near term, Sandeep Wagle, Managing Director and Founder of Appetite Technical Advisory. Before I start the panel discussion, here's a look at market action for the day gone by. Nifty has closed once again above 5,900. The biggest gainer today was the auto index. The metal index has been in some kind of an uptrend. The metal index is now up for 4 days on the trot now. Large cap FMCG stocks, they are under intense pressure. So obviously there is a trend, excuse me, which is clearly visible where traders, they are taking money off the table when it comes to defensives, and that money is getting redeployed or rechannelized in some high beta sectors like metals and real estate. Mid-cap real estate stocks, especially some Mumbai-based real estate names like Oberoi Realty and DB Corp, they were in demand today. And then Tata Motors has closed once again above 300 rupees. We'll discuss that stock at length and what is really driving Tata Motors. Some absolute gainers now, Sun Pharma, ONGC and the Asian Paints. Now here's an interesting data. Which are some of the key Nifty 50 stocks which are at a new high. So autos, pharma, and then select banks. So the good old consumer themes clearly are holding on. Some stocks in news, DLF, Reliance Power, and the banking bill impact was clearly visible on select NBFC stocks and some select old private sector banks as well. So what's the way forward for Indian markets now? Technically, let's first understand the big picture from Sandeep Wagle. Sandeep, you go first. How would you characterize today's market action, the fact that Nifty has closed above 5,900? Do you think Nifty is now on course to close above 6,000 before the year ends?
Nikunj, before the year end, I am not very certain, because for December series, I would talk of 6,000, 6,020. Now we have just a few days left in this series. We have 1 week. So I won't take that bet, but talk of the next 3 months, I would talk of a 6150, which we have been talking of. And over the last 3 to 4 weeks, I have been talking of the fact that 5800 will act as a very strong support. And whether the market moves up or not, it will not break 5800. And that has been proved right. And as of now, it looks very much likely. So it may move sideways for the next few days or weeks. I won't bet on that it will take off 6000 and go to 6150, which is eventually the target. But I would be fairly confident of the Nifty not breaking 5800, and any move towards 5850, 5870 is a good buying area. Now I want to see how it breaks 6000. It will test 6000 in the few days by end of this month, but it may not break it convincingly. So that I would reserve my comment, but the bias is definitely on the upside.
Nitin, are you pleasantly surprised that the resilience Indian markets have reported of late? The most notable feature for the month of December is that markets are not reacting to bad news and they are recognizing good news.
But Nikun, that's been the trend now for quite some time. Post the results, you've been seeing the markets. I mean, you know, after the sharp rise that we saw a couple of months ago, what the market has been doing is it's been gradually inching up. It's been going up, then kind of consolidating into a very narrow range, disregarding a lot of news coming out, even the negative news, and then just remaining in a range and then gradually inching up. I think the fact of the matter is, let's not fool ourselves, the flows have been tremendous as far as this market is concerned. And that on the back of the fact that you have benign news coming from global sources, and the fact that, you know, on the Indian front, the government seems to be showing some initiative in terms of getting some bills passed and, you know, various announcements emanating from Delhi. I think all in all it's created a good mood. But, you know, having said that, you know, we've had a market which has given us anywhere between what 27-28% kind of return this year in a calendar year. Now, if you look at valuations, while they're not cheap, they're not expensive, they are neither cheap. A lot of them have run up. I think for the next leg up of the rally, so while we are very, very bullish on the market with the next 1 year or 2 years view, but we think the next leg up the rally, the market will really be looking for numbers to start coming, or the signs of change to start emanating on the fundamentals.
Dipesh, this question is coming your way. Since the street is of the view that we have a firm bottom in place, and since global news flow and local news flow has improved, so at the current juncture, given the kind of environment we are in, what is your current portfolio strategy?
I wouldn't agree that banks are priced for perfection. I think banks still look good. Multiples are still lower than where they used to be historically. Loan growth is sluggish, but it'll improve going ahead, and credit quality environment should improve. I think within banks, government-owned banks selectively offer a very good trade because the valuation gap has become too wide, and the concerns on restructuring and non-performing assets should recede gradually. So that segment remains a big overweight. Beyond that, I guess within consumer and pharma, the typical defensive stocks, I would much rather own pharmaceutical names, as plays on weakening Indian rupee, and in general, I think secular growth for these companies, both domestically and in exports. Besides this, I think IT services stocks, while there is clearly growth is slowing down, I think valuations reflect that, and as and when there is pickup in US and there are signs of that, these companies should do better. So IT services is another segment which I would like to own. Besides that, I think there are a whole lot of stocks in mid and small cap segment which have done well and should keep on doing well going ahead. So this is broadly the range which I would look at right now.
Dipesh, what do you make of the new banking amendment bill? And is there a case now to revisit PSU stocks, and especially some of the old generation private banks?
NBFCs have also done well, especially retail-oriented NBFCs have done extremely well. I think one should continue to hold these names because all these companies are delivering very strong growth, even when there is overall slowdown in the economy, because consumption trends still remain strong. So NBFCs, government-owned banks, obviously one needs to be much more selective. But I think where valuations range from 0.6 times to 0.8 times price to book, and there are efforts to resolve NPA issues with State Electricity Board and Air India, etc. So hopefully things will improve in that direction. So I think there is a trade in terms of valuation gap reducing for some of these names, and generally as interest rates come down, as macro environment improves, people will have less concern. So that's why I would prefer to own some government-owned banks also at this point of time.
Gentlemen, stay with us. Let's take a break. But before that, we are leaving you with some F&O trading ideas for tomorrow morning.
Metal stocks have been buzzing for the last few days because of the data coming from China, US and the fiscal cliff decision. We have a strategy on Tata Steel. Tata Steel has moved up and is trading at around 425 levels. Investors can buy January series 1 440 call of Tata Steel at 10.5 and sell 2 460 calls at 5 rupees. There's an initial investment of 0.5 rupees in this strategy, and investors should make profit if Tata Steel remains between 440 and 480 levels. Stop loss can be placed at around 478 levels.
What exactly could influence and impact your portfolio tomorrow? Number one, it has to be the outcome of Gujarat elections. Do monitor movement in stock futures, because of late the game has shifted away from Nifty futures to stock futures. The dollar index is at a fresh 2-week low, and if one maps the institutional activity, domestic institutional investors are sellers, but the quantum of selling has reduced, which to my mind is some kind of an indication that maybe the retail redemptions are now dying down, and which to my mind really could be a big turning point for the year 2013 as well. Nitin, from the market perspective, what is the importance of Gujarat elections?
I think from a market perspective, unless there is a surprise, I think the market probably is discounting the fact that the Narendra Modi government is going to come back based on various opinion polls and so on and so forth. Now, however, if the Congress kind of comes back and does far better than most people's expectations, then I think it's only better for the market in that sense. But I think so. Let's look at it from both ways. I think if Narendra Modi wins with a thumping majority, I think most people are already expecting that to happen. If the Congress, on the other hand, comes back and does well, so that's a pleasant surprise and kind of strengthens the hand of the government at the center to be able to pass through a lot more things.
Sandeep, what are your thoughts on autos? Excuse me. Are you confident that Bajaj Auto, Tata Motors, the performing auto stocks, they have another 10% left on the table?
Nikunj, I'm fairly confident. If you talk of the next week or so, maybe that may not happen. But if you talk of the next month or a couple of months, and you can take 5% down and use that to buy into that kind of a dip or a correction, whatever you term as, I am fairly confident. Probably it can even go a little more than 10% given a period of 3 to 4 months.
I think the business environment for Indian auto sector is quite challenging. So what to your mind is fueling this momentum in auto stocks? Lack of options, attractive valuations?
Is that for me, Nikunj?
That's right, Nitin.
Okay. So I think clearly what you're seeing is a couple of things really happening. One is the most auto stocks are the so-called interest rate cyclical plays, and you've seen a big run-up and rally. Because most people post the RBI policy, most people are expecting Jan for the interest rate cycle to cut to finally start happening. So I think that's the reason you've seen real estate and autos being no exception to that. So that's one part. The second is, I think really if you look at autos and take say a Tata Motors, I think clearly there was a valuation case. The stock was trading at like 6-7 times kind of earnings. So you had some sort of a and the fact that their global sales continue to hold out against the pessimism that is thought to hang over Europe and the global economy. So I think a mix of both is really seeing the autos continue. And the third is, if you see a category of Mahindra and Mahindra, whose sales continue to be robust. So in all these three categories, you're seeing one is on hope, one is actual numbers taking place.
Dipesh, since the consumer staple part of the market is optically looking expensive and you're still hot on the consumer demand, so how exactly are you betting on consumer discretionary?
I would agree, because clearly valuations look very, very high for consumer names. While that was true even beginning this year, stocks have continued to do well, and this was also in an environment where none of other sectors were showing any signs of pickup. Now we are in a situation where there is a hope about other sectors picking up steam. Banks especially have already done well. There could be activity in maybe some of the automobile names. Maybe engineering should pick up as investment activity picks up. So I think in an environment like that, when people have more choices, investors would look for more alternatives versus consumer names. And there should be mean reversion happening in that way. So I think there are better ways, and you talked about some of those. You could play it through banks, you could play it through some of the NBFCs, and NBFCs keep on doing extremely well in India. Automobile, possibly there should be some pickup, I think, in cars or in two-wheelers. CVs possibly will remain weak for some time. So one needs to look at other ways. Media sector could be another interesting sector. To look at playing the consumption theme.
Nitin, how would you characterize the environment for large cap IT stocks? Because the street clearly is divided. Infosys, the management commentary is not all that strong, but if I map what TCS has indicated 2 days ago, they're pretty confident of maintaining a strong run rate for second half of this year.
Sure. So I think the way you will play this is clearly it will have to be stock specific as such. So I think various business models have various challenges. So on the one hand, you have a TCS who comes out and is kind of reassuring its the investor community that it continues to see robust business momentum. On the other hand, you have an HCL Technologies again, who's playing a different business model, who's really going after all the contracts which are coming up for renegotiation and then pitching its space out there, and who has done well with that model. On the other hand, you have an Infosys which has been struggling now for the last 8 quarters. So clearly, I mean, it's more business model based and so more stock specific, and that's the way you would play it. I think clearly there is a wall of worry that hangs over with the, but I think the difference really from the past and the early 2000s when it was completely a sector specific issue, it really comes down at this point of time, the whole sector as a whole is not facing as much, uniform pressure. It's more stock specific and business model oriented.
Sandeep, the metal index has been on a tear. The metal index is now up more than 5% in just a matter of 4 days. So for next 5 days, for next 7 days, if you have to pick and choose between metals and autos, where would you put your money?
Well, I'm liking both very honestly, Nikunj. It will be very difficult to answer this question in terms of which to choose. So I would choose both. I mean, at this point in time, I am seeing a move in both of these. I mean, a Bajaj Auto, a Hero MotoCorp is looking good, and at the same time, a Tata Motor, a JSW Steel. All of them are, in spite of such a rally over the last 4 trading sessions, they're still looking good for another 5-7%. So it would be difficult to choose between them.
Sandeep, I was looking for an answer, but you've confused me more.
Normally you do that, Nikunj. Let me do that sometimes to you.
So let's nail it down to one idea then. From the auto space or from the metal space?
Auto space at this point in time, Bajaj Auto is looking good over the next few weeks or so. But talk of the next few days, we have chosen Hero MotoCorp as a BTST today. So immediately, if you talk of the next 2 days, I would go with a Hero MotoCorp. And in the metal space, I would go with a Tata Steel for a target of around 438 to 440. Currently, I'd say 420 to 420.
Now for some stock ideas for tomorrow morning, and for that, let's go to Poonam. Hi, Poonam.
Hi, we have Aptec, a buy on Aptec as well as a buy on Bajaj Corp. On Aptec first, this stock is just up close to 10% on a YTD basis, and this company is surely facing a lot of challenges at the revenue front, but receives good dividend income. Rakesh Jhunjhunwala, along with its Rare Enterprises, holds close to 35% stake in the company. However, the key thing in Aptec is that the BJP Career Education, its China, its subsidiary in China, Aptec holds close to 22.4% stake in this subsidiary, and this subsidiary is likely to get listed in China. If it gets listed, then definitely the company would see some upside on the valuation front, and it should hold good for the stock as well. Next is Bajaj Corp. This stock is up close to 142% on a YTD basis and trades above all GMA. Analysts are really bullish on this stock as the company is likely to gain some market share in its almond oil business over the next 3 years. The company has also invested, or rather has been investing in its distribution as well as brand building exercises. The raw material prices have remained stable and hence this will aid margins. Also, if the company does hike its prices in the month of April, as the likely practice is, then that should lead to some margin expansion. Lastly, on this, the company has not yet finalized any plans to develop its acquired property in Worli, and if and when it does so, that should provide some upside to the valuations as well.
Sandeep, what are your top ideas for tomorrow?
Nikunj, I would go with a buy in Syntex, stop loss of 66, target of 75, a buy in BPCL, stop loss of 353, target of 372, and a buy in Jain Irrigation, stop loss of 74, target of 8250.
Dipesh, the top trade for 2012 so far this year has been bicyclicals and hydrogen pharma names. What to your mind could be the top trade for 2013?
I think the big trade for 2013 potentially could be in in engineering companies or some of these asset owners, because some of these companies have been burdened by huge debt and interest costs. As interest rates recede, some of these companies should benefit. But I won't do that immediately. I think I would get into this trade maybe second quarter or third quarter of next year, seeing how interest rates are panning out and if actually investment activity picks up. Beyond that, I think financials will still do well. So that, while it has been a strong trade in 2012, would remain so even next year. Valuations can still improve, especially when we look at historical valuations. Most of these private sector banks used to quote 2 times plus, in terms of price to book. So some of the bigger names are still below that. So that could be another trade which will continue next year, especially in a falling interest rate scenario.
Nitin Raheja, where are you putting your money to work, and how are you picking winners for 2013?
Well, our policy and philosophy has always been focused on stock specific and bottom up. So one of the stocks that we like is a small to mid cap pharma company, NBFC company. It's called Magma FinCorp. It's got some very quality investors like KKR who sit on its board. If you really look at its corporate governance, exemplary. The promoters barely have 2 people vis-a-vis 6 independent directors of quality caliber on board. The stock quotes at 1 time book, is growing at 45%. It's kind of coming over a terrible period where the frequent changes in the NBFC regulations which had hit it, especially with relation to securitization and so on and so forth, are behind it. Plus, it's focused on high growth businesses and high margin businesses such as used car financing, tractor financing, and so on and so forth. So all that is seeing margins expand for it. So, and it trades at 1 time book vis-a-vis a lot of its peers who trade anywhere between 2 to 3 time books.
All right, thank you everyone. Poonam, thank you for joining us. Nitin Raheja, Sandeep Wagle and Dipesh Pandey, thank you for your wonderful insights. That's it on this edition of Markets Tomorrow. I'm Nikunj Dalmia signing off. Thank you for watching the show and have a great evening.